Warning though that despite the return of this investor sentiment that we're seeing today, volatility still really remains quite strongly embedded there in our market, with the likelihood it actually may well become what some are calling the new normal. Do you think that this is the case?
Moira, last week we saw the best weekly performance since 2009, and then this week we've seen 4 consecutive days of losses and then an absolutely stunning end to the week where more than half of the week's losses have been gained back, a gain of 2.6%. It was interesting to see today's performance because we did see divergence between the Aussie share market and the Aussie dollar. Usually when we see such a strong equity market performance and a risk on day, what we do see is the Aussie dollar moving upwards with the equity markets. But today we saw the Australian share market doing extremely well, but the Aussie dollar going the other way. I think one of the keys to today's market were not only the overseas and the offshore drivers that we've been seeing, especially in regards to Europe, but we saw the Reserve Bank forecast coming out. And for 2011, in terms of growth, they're now forecasting 2.75% down from 3.25%, and they've also cut their 2012 forecast. Importantly, the underlying inflation, excluding any costs of carbon tax, will remain at 2.5% for a number of years. And what this means is that they haven't cut off the option of lowering rates even further, which of course would be a negative for the Aussie dollar but a positive for the Australian share market, and we saw that being played out today. Materials was the space to be watching. That space up by 4%. In fact, if we have a look at the biggest stock in that sector, BHP Billiton, up by a massive 3.9% today and responsible for a 16-point gain on the index. In fact, if we have a look at BHP Billiton and Rio Tinto, just these two stocks responsible for 1/5 of the gain on the Australian market today. If we have a look at the commodity space, though, a little bit of a mixed performance in Asia. Gold and oil prices were lower. Copper prices only up marginally, and yet we saw stocks like PAN-AUS up by a massive 10.5% today. Now, part of that is because of the losses that we have seen in the week to date before today's trading session. And while PAN-AUS is up by 10.5% today, in the week to date before today's session, we had seen a loss of 11.3%. Jindawi today up by 9%, but in the week to date before today's session was down by 13.8%. So altogether a stunning performance, but for the week still ending down 1.7%.
Sitting in the October in general, did we see an increase in some of these fund flows heading back into equities?
It was actually quite interesting to see the ASX's announcement today about volumes, and for October we saw a rise of 7.1%. It's a very strong rise, but what we forget is that it follows on 6 consecutive months worth of losses, and the ASX's statistics for October give us a bit of insight into what's happening in the market at the moment. If we have a look at the daily value traded, well, that was down by 11%. In fact, we saw an average of $4.7 billion per day, and if we have a look at the previous month in September, that was at 5.4 billion. So that was a lot less. But if we have a look at the number of trades that happened per day, well, that was actually up 12% on the previous corresponding period. So what we are seeing are more trades, but much smaller trades. So it does look like people are a lot more nervous in this market. It probably has to do with the high volume turnover in algorithmic trading as well. One area of very strong growth has been the equity derivatives area. This area was up by 42% on the previous corresponding period. So we are seeing this area growing quite strongly. Interest rate derivatives also looking quite healthy, but it was a bit of a pullback from the previous few months. So I guess what we are seeing is still a lot of nervousness on the market, and that is being reflected in terms of the amount of money going through the market. And volatility, unfortunately, while it can signal the start of an uptrend, it's usually more commonly associated with downtrends and markets falling quite substantially. In fact, if you have a look at monthly gains of 7.1% or weekly gains of 5.1%, it's a type of number that you relate more frequently to the global financial crisis than really that 2000 to 2007 period where we did see quite a strong bull run for the Aussie share market. Look at Qantas, we have seen a positive reaction in terms of the shares. The stock up about 4% in the last week, and in fact in the last month gaining around about 15%, so outperforming the Australian share market by around about double. So if we have a look at Qantas, some of the uncertainty surrounding the stock in the last few weeks weeks has been taken out. But of course, October was a month where we did see Qantas's shares reaching an all-time low of $1.35. Planes are now all up and running, 21 days of, I guess, Qantas being at normal capacity, so that should be a positive for the shares. And now we really have to see the outcome of this industrial action to see where Qantas's share price goes next. We have a look at the two big costs in terms of Qantas. One's a fuel bill, which stood at $3.6 billion last year, and the other is the labour cost, which stood at $3.7 billion. So it is important in terms of Qantas's operations. It's been a tough year with all the natural disasters and the volatility that we've seen in fuel prices, as well as the additional costs of having to renew their fleet. So we will be watching this stock with caution, but in terms of valuation, looking very cheap. So I guess just the added certainty has been positive news for Qantas' share price this week.